Hello, and thank you for joining us today. Before we begin, a few words about this webinar technology. This platform allows our audience to be more involved with the presentation and, more importantly, allows you to watch this event the way that you want to watch it. To begin, feel free to customize your webcast console. You can move windows around by dragging on the title bar or resize your windows by clicking on the lower right corner of any window. You will notice a toolbar at the bottom of your console. These buttons allow you to open and close widgets on your screen. And by the way, we invite you to get social. If at any time during our session today you hear something interesting, please feel free to tweet to TrueMotion and to your followers using the Twitter widget. If at any time you experience difficulties with your audio or advancing of the slides, simply press your F5 key to refresh your webinar console. You can download the slides for this webinar by clicking on the green folder icon on your screen, and you can do this during the webinar and it won't interrupt the presentation. We appreciate your feedback, so please click on the survey icon and complete the form. You will see that we have a Q&A box next to the main slides, and we'll be taking some time to address your questions at the end of the webinar, so please make yourselves known and we will try to get you the answers today live. Now I'd like to introduce today's speakers. Firstly, Brad Cordova is the co-founder and CTO of TrueMotion. Brad from Belen, New Mexico, co-founded TrueMotion in 2012 with Joe Alderman, Scott Griffith, and John McNeil. The trio set out to make driving safer through the use of data and analytics, as well as help insurance companies identify risky and cautious drivers to reward safe driving. TrueMotion has raised $13 million in funding and has grown to 42 employees. The startup has 10 customers, including three top 10 insurance companies. Joining Brad is Ted Gramer, CEO of TrueMotion. Ted spent more than a decade with Liberty Mutual Insurance in a variety of executive leadership positions, including Executive VP and Claims Officer and Executive VP of Liberty Mutual International. Most recently, Ted was the Managing Director for Global Property at Solera, a global leader in data and software for automotive, home ownership, and digital identity management. Ted holds a Bachelor of Science in Management from Bentley University, an MBA from MIT Sloan School of Management, and is a chartered financial analyst. So with that, I'd like to hand over to Ted.
Thank you, Andy, and good morning, everyone. This is Ted Gramer, the CEO of TrueMotion, and we are really excited to have a little bit of time with you this morning to talk about the mobile telematics space. And this is an exciting area, a lot of activity going on, and we think there's some really exciting opportunity for the insurance industry. So what we'd like to do is spend maybe 30 to 45 minutes and share with you our perspective on the industry, and then maybe 15 minutes or so at the end to take Q&A from the audience. So maybe just as background, we spend a fair amount of time in the insurance space talking to folks and sort of trying to understand the problems facing insurers today. And they basically fall into sort of three buckets. One is short-term growth and profitability. So we're in our third year of combined ratios over 100 in the U.S. auto industry. A big part of that is actually driven by loss trends, and part of the driver of loss trends that we'll talk about more is distracted driving. So the traditional factors alone don't seem to be explaining the trends that we're seeing in the market, and we'll share with you some of the data on distraction. Another is customer engagement. So this is an industry that largely for the last several decades has focused on a low-touch model. How do we sort of interact with the customers 1 or 2 times a year? And that was sort of worked for a long period of time. But today, customers are expecting a lot more than that, and insurers seem to be across the board struggling to figure out sort of how to make that happen. And then last is business model risk. So when you think about longer term, we're seeing a lot of companies trying to figure out what are we going to do with autonomous vehicles when frequency drops? What are we going to do with connected car and the new sources of data? How are we going to deal with these new startup companies that are coming into our space? And are those realistic threats to our future? And so we see a lot of challenges kind of across the board. And one of the things that's pretty interesting is if we, we'll hit the next slide here. When you think about what are the types of things that enable the insurance industry to start to respond to these challenges, there's no silver bullet, but there is one thing that we think helps sort of across the board, and that is collecting driving data. And driving data is something that really the industry hasn't used extensively for several decades. But people are started with UBI. And UBI was the first foray into let's put hardware into cars, let's collect driving data, and let's use it for pricing. And I think what's really interesting and what we've sort of started to see a lot more in the last year is what started out as data that helped improve pricing actually has value potential across the entire customer life cycle. So when you think about the opportunities for lead generation to better inform marketing and acquisition money, driving data helps. When you start to look at the problems of distracted driving and the 3,000 plus accidents or fatalities we're seeing a year, how do you solve that? The driving data helps for mobile. Garaging data, crash pre-fill at FNOL type of information, ride-sharing indicators, building engagement programs that are touching consumers more than once or twice a year, and reward programs. So it turns out that what started very much as like how do we price more accurately than just using credit and prior losses, now kind of turns into sort of a broader platform that can really sort of enable the next generation of insurance products and services. And so where are we going to get driving data? The connected car is sort of one obvious place. And it's pretty exciting when we think of all the technology that's coming out in cars today and the types of data that we'll be getting. So the average consumer has maybe 4.5 trips a day. And so this is tons of new data that we haven't had as an insurance company. If you look at the challenge with connected cars, it's really penetration. So the data would be really interesting if we had it on most of our customers. But the challenge today is that less than 10% of the cars on the road are connected. And then of the ones that are connected, they are all different makes, models, sensor configurations, data quality, user permissions, and commercial terms to get it from the OEMs. And when you look at the average age of the U.S. fleet being 11.5 years, the challenge is even if we assume that 80 to 90% of new vehicles coming off the assembly line by 2020 are connected, as an insurer, it's probably still 15 years until half of your customers have the data to build these new products. So what we did is we started as a smartphone-only company. And we started with the fact that when you look at smartphones, 85% of consumers already have smartphones that are packed with the technology that's needed to collect a lot of this. So I'll hand it over to Brad here for a couple minutes and ask him to share a little bit of sort of how we look at smartphones and technology and how it informs our products.
So if we think about what a smartphone is, it's actually an extremely powerful computation device. But in addition to that, it's also an extremely powerful sensor collection device. And so what kind of sensors are on a modern smartphone? Well, we have magnetometers, which can measure the local magnetic field. We have GPS sensors, which can measure your speed, your direction, and your location. You have accelerometers and gyroscopes, which can tell you how the phone is moving, barometers, which tell you the barometric pressure, and many other sensors are coming into these phones every day. And so this is the current state of the world, and it's extremely powerful. So it makes a lot of sense to leverage this power. And then in the moment, and then in the future, these phones are just getting better and better in terms of the compute power, the number of sensors, and even the battery life. So how do we use this powerful device that 85% of people have to solve this problem? So these devices are powerful, but it's no panacea. If you want to use the smartphone in lieu of the connected car, you actually have to solve some really difficult problems. And what's the intuition behind this? Well, the sensors in the connected car are always fixed to a particular car. So you always know that it's this BMW 3 Series, etc. Whereas when you use a smartphone instead, the smartphone can go with you everywhere, which is in some ways a huge benefit. But if you want to know other details, it's not a benefit. So the first thing we do is we ask, what mode of transportation are you in? So we harness the power of machine learning, and we can tell if someone's walking So using the accelerometer and gyroscope, when someone's walking, there's a very repetitive pattern at the frequency of their stride frequency. And so when we detect the phone's moving at a certain rate and they're actually not walking, then we run these other algorithms. For example, we run an algorithm to tell if you're in a bus. And if you think about what a bus is, it's this big three-dimensional rectangle that's also made out of metal. And this is just a fact of physics that metal bends the magnetic field from the Earth. And so if you use your magnetic field sensor and you can detect a difference between the magnetic field of a bus and a magnetic field of a car versus a train, etc. In addition to the magnetic field, we can look at the accelerations of the bus. So the axle of the bus is very long, the bus is very heavy, the radius of curvature of the turn is also quite big. So we look at these sensors and we have a lot of data and we train our machine learning algorithms to detect that. In addition to the bus, we can look at things like the airplane. So when we detect something's moving very quickly and we look at the barometric pressure, which is correlated to altitude, we can see if someone's very high in the air going fast. So maybe we don't want to collect data then. Boats, for example, we look at map data to see if someone's driving on the water. And as you can imagine, boats also have a very particular frequency. So the takeaway is we analyze all these different modes of transportation and we can tell if someone's in a car to over 99% accuracy. So after we tell you're in a car, the next question obviously is, are you actually driving the car? You can imagine a scenario where you're in the back of an Uber or taxi, you're text messaging, the Uber's speeding, slamming on the brakes. This could look like a very dangerous trip, but in terms of your insurance risk, these two things aren't actually correlated. So this, without knowing if someone's the driver, this adds a lot of noise to your risk models. And so we solve this problem in a number of different ways. It turns out that there's no one silver bullet that solves this in every scenario. So we have to use a lot of different signals and combine them into a single ensemble to make a final prediction. So let me give you some examples of how we do this. Some of the things we look at are, how do you exit the car? So when you exit on the left side of the car, you put your left leg out first, and then you rotate in a counterclockwise direction, and finally you get up out of the car, or if you're in a truck, you step down. So and then this is in direct opposition to if you get out of the right side of the car, you put your right foot out instead, and then you turn clockwise. So we look at this signal, and so we can tell relative to a vertical reference frame, if you rotate counterclockwise out of the car, we know you got out of the left side of the car, and if you rotate clockwise, then you got out of the right side of the car. But you can imagine you can also get out of the left side of the car in the back seat. So we have other algorithms to tell if you're in the front or back. And we combine these with about 150 other signals, looking at things from, are you driving from home to work? Because that changes the probability of you being the driver, etc. So we get around 92% accuracy. It's actually better now after releasing some new algorithms, but extremely high accuracy. As you can imagine, it's an extremely difficult problem as well. Next slide, please. So what does this give you? So once you know someone's in a car, once you know they're the driver, and you know all these details about the car, then you could start combining this information to solve really high-value problems. For example, one of the problems we solve is, did you get in an accident? And not only did you get in an accident, but how did your accident happen? So we can get the location of the accident, the time it happened, the speed at which it happened, where did the impact happen, did the airbag go off, was someone distracted leading up to the accident, or were they distracted and then slammed on the brakes? We could even see, can someone walk after the accident? So we could get a baseline of someone's gait. Right? So most people have a relatively symmetric gait, but maybe after the accident there's an asymmetry, and so we can know that oh, maybe they injured their leg, and it's also important on its own to know if someone can walk. We can also know the weather and the traffic conditions. And so having the smartphone is extremely powerful and can allow some very high value applications, but you need to solve these really difficult problems first, which we've spent kind of the last 5 years solving.
So I think what's really interesting when you look at this is if we now go back and look at sort of what data were we hoping to get from the connected car, and you think about sort of using the sensors and machine learning from the phone today, sort of we can get most of the data that we're going to get from the connected car, and we can get it on 85% of the population, not 10. And in addition, we can also get more behavior-based metrics, which, as we'll show you in some of the coming slides, we think that basic car movement is a good sort of level 1 predictor, which is better than traditional pricing. But when you see car movement data plus behavior data, and we look at distraction, and we think about sort of being able to look at all the consumers' interactions with the phone while they're driving, it brings a lot more insights into the picture. So our strategy overall is pretty simple. Like, what we do is we embed our software kit into insurance company apps, and that runs in the background when consumers opt into sort of a UBI program, and then that software kit sort of activates and coordinates the collection of sensor data. That sensor data is then sort of pushed up into the cloud and processed on our machine learning platform. And then what we do is we transform that raw sensor data that Brad was just describing that's like really noisy, and we transfer it into information that's valuable to all different parts of the insurance value stream. So UBI APIs that help you with different pricing and scores, next generation claims that we'll talk about, loyalty programs, ride sharing work, and fleet management. So what started out as a simple project to replicate the benefits of hardware-based UBI has now become a much broader portfolio of data and services that really enable the insurance sort of next generation products. So what I'd like to do now is I'll go through quickly each of sort of the product areas just to give you a flavor for the types of things that we're doing. So the first is on UBI, and I won't go super deep into UBI because I think what we see in the market now is years ago people wondering, like, is UBI better than credit and prior losses? And I think the answer across the industry is yes. And then the question was, you know, can you do this with mobile, or do you need hardware? And I think enough people have now done this with mobile to say, you know, mobile works and mobile beats hardware. And there's a couple examples here from the work that Progressive is doing and some of the good progress that they've made in this space. But mobile overall is working well. What's interesting on top of sort of the traditional UBI is the insights that start to come from adding distraction. And so we talked a little bit earlier about the challenge the industry broadly is seeing with loss trends and how much of that is correlated to distracted driving. And the problem with the industry has been there aren't any metrics to understand distraction and the impact of distraction on the book. And so what we did in one analysis is we compared, and this exhibit shows sort of the correlations between a traditional UBI score, which might be like a 3-factor, you know, hard braking, miles driven, and speeding. And what we do is we correlate that with the same score adding distraction. And as you guys know, looking at these charts, if the distraction had no additional input, all the dots would be along the 45-degree angle. But what you can see is there are actually a fair number of people, like first, most people are good drivers. So most of the dots are pretty close to the line. But there is 20 to 30% of the overall book that isn't fitting. And those people turn out to be a much higher risk than your traditional UBI model would identify. So you can see the dot here. A typical 3-factor score might find a person who is an 80 based on their basic driving characteristics, but then when you include their level of distraction, their score actually drops down to 40. So this is kind of the piece of data that shows the challenge the industry's been having. Without this data, the loss trends are all predicted off of historical frequency and loss cost data, which isn't picking up sort of this tail of folks on the upper left-hand side. So we think that no doubt that UBI data is working, and I think you'll see more and more companies looking at both using UBI, but also starting to bring the traditional or bring new distraction data into the scoring. And what enables this is a couple of things that we do that are pretty unique. One is we segment distraction down at a fairly granular level, and this is kind of the top of the decision tree. But at the highest levels, what we're doing is we're looking at, are you using the phone for traditional phone calls? And if you're making a phone call, is it handheld or is it hands-free using Bluetooth? And then the other branch is, are you just using the phone like apps or different searching on the web or texting? And that category gets broken down into active use. And active use is, the phone is not in a mount, it's in your hand, it's actually moving around, and you can actually see that there's live interaction with the screen, like you're texting. Passive use, an example there would be, you have the phone in a mount, you have Waze on, the phone is unlocked and lit up, but it is not being interacted with. And the reason that we've got this taxonomy is it sort of ties to sort of underlying risk. So on the next page, you have the sort of breakdown of each of the different subcategories. And the important part of this is you can start to see that the risk factor associated with all these different types of distraction is different. So if you don't have a granular view of distraction, you're sort of mixing these together. If I look at kind of the first row, just as an example, texting is 6 times riskier than normal driving. In 2012, 2% of driving time was people were texting, and in 2016, that was 12%. And so when you take all these and you weight them, you can start to see that the CAGRs, or the compound annual growth rates, and the impact on loss trends ties out to a lot of the overall trends that we're seeing in the market that are unexplained. And the important thing here is you can capture this data on your book of business, and you can capture it sort of monthly or quarterly, and you can start to feed it into your actuarial loss assumptions. So we think there's a lot of potential just taking this granular driving data and using it for pricing. And even some additional insights that we've seen here because of some of the data we captured, as Brad described earlier, like we know when people are on planes, we know when you're on trains and things like that. We're able to take some of that underlying data and start to draw some insights from it, which is kind of just more interesting at this point than anything that's used in pricing. But what we see is that on average, cyclists, people who have the the mode of transportation frequently at 6%, they're 6% safer than normal drivers. If you look at people who are frequent flyers, so frequently triggering the mode of transportation equals plane, they are on average 10% riskier than normal drivers. And then people who take public transportation on average 7% worse. So this doesn't control for miles driven and things like that, but it gives you a sampling of the type of insights that you can start to gather from this data. So that's the UBI, and I think that one thing we've seen at this point is just the UBI works, but we also think that UBI on its own isn't the silver bullet to building the overall customer engagement. We think adoption rates in UBI continue to grow, but that the opportunity is sort of probably to combine UBI plus loyalty plus claims and a bunch of other things to really build a compelling offering. So when you look at loyalty, you can see there's a recent Bain study that was really interesting on the insurance space, and I think everyone has probably seen this type of context and struggling with this challenge, which is it's a low-touch business today. Low touch is low loyalty, and low loyalty gets you to commoditization. And the challenge here is this is what the insurance industry is largely focused on for the last couple decades, which is let's centralize operations, let's have fewer touches so we can keep costs down, let's try to sort of raise rates a few points every year and not poke the bear in terms of like retention rates and things like that. And that's been part of the model. But consumers are now looking for more. And if you look at the Bain study and the types of things that consumers expect from their insurance company, they are things like breakdown services, safe driving rewards, theft alerts, damage alerts, repair shop discounts, safe driving. You know, these are the same 5 things that every one of these consumer studies come back saying people expect more from their insurers, and these are the types of things that fit as being relevant and sort of value added to the consumer. And the good thing is most of these are enabled by mobile. And we'll kind of walk through a lot of these, but once you have a digital platform, once you have an app on the phone, offering these services when you have driving data is actually pretty easy. And you know, the opportunity here is that the phone is where consumers are today. And so even as we talked about the connected car is interesting, but consumers are permanently attached to their phones. People are spending 3 to 4 hours a day on their phone. And when you think about the emerging business models across the consumer space, whether it's Amazon, Facebook, Spotify, Uber, any of those, they are all mobile. And we're in a mobile-first world. And unfortunately, when you look at the insurance industry, and I'd say that this varies quite a bit based on carrier, but in general, the average consumer has 80 apps on their phone. Most people don't have their insurance app. The insurance industry in general has low app penetration, very few interactions per year. And when you look at the types of things you say to people, what can I do with my insurance app? It's like make a payment and get my insurance card. So those are like not really compelling offerings to the consumer, which is why penetration is low. And what's interesting when you start to look at the driving data that's collected with a telematics platform, that driving data actually enables a lot of these things that we were talking about, like first, value-added services. Those are easy to build as soon as you start to know where the customer is driving and how they are driving. In terms of broader safety programs, like people have there's real interest from consumers today to help solve this distracted driving problem. Like thousands of people a year are dying in distracted driving. Everyone's frustrated. They want the insurance industry to take a stance and help make this better. And so how do you activate that in the insurance world? You can do it with mobile. You also have social, and really you have levels of personalization that allow you to start to interact with consumers and provide rewards and things like that at a pretty granular level. So what we do is, with the mobile telematics platform, we think it just enables a whole host of different programs, and we call these sort of boost programs. But really our view is that having one single app that's on the consumer phone 12 months a year, and it's on 100% of your book, not just new business, is where insurance companies are trying to get to. And the challenge is if you're on the app sort of year-round, it can't be one program. Like you just put one simple reward game out there and you leave it there for 12 months. What telematics enables you to do is spin up a whole bunch of different boost type of programs that have targeted improvement efforts for different segments at different times. So you don't treat everyone the same. You go in and say, okay, I have a segment of new drivers, teen drivers, for example, and you have a teen driver boost program. And what that does is it takes any new teen driver and you spin it up for that segment, and in 90 days, you take that teen through sort of a deliberate program that should take their driving score from X to 1.5X. That makes frequency better, it makes your customer more engaged, adds value. New business boost. So we think there's an opportunity when you look at retention rates. So people spend a lot of money to acquire a new customer. What if at sort of 5 months on a 6-month policy, you were able to spin up a reward program for that targeted customer, and you can move first-year retention rates by 25 basis points. Distraction and safe driver programs. Again, not on your phone 12 months a year pelting you with text alerts, but how do I build like a high-impact program that targets sort of certain segments of drivers and gives them rewards for getting better? And then more broadly, depending on any of the different strategies by carriers, whether it's affinity programs or agent channels, you can really spin up different programs that have targeted benefits. So we think that loyalty is not kind of a one-size-fits-all, put a big competition or raffle out there for everyone, but it's really targeted efforts and targeted programs that have KPIs, they have clear benefits, and they are spun up in a targeted way to sort of drive those initiatives. So the next section, claims and accident services, obviously only impacting 1 in 10 customers or so, but this is a moment of truth for consumers, and we think that part of the challenge for the insurance industry more broadly is claims is still probably one of the most tedious processes from the consumer perspective, and from a carrier perspective, despite spending significant amounts of money on new core systems, claims organizations are still very manual, very high staffing costs, and that is both not great for the consumer and it's not great for the insurance carrier. And the question is sort of, what can we do to make that better? And when you look at sort of where a lot of the process cost is in the claims value stream, and you think about the claims value stream from first notice of loss all the way down to payment, the area that TrueMotion and Telematics really makes a difference is in the front few steps of the claims process. So all the downstream areas like valuation and negotiation, like there are a lot of good tools that are in the market now that help you with valuation of appraisals and parts and even injury valuation. There's been great progress there. But in the front part of the process, this remains largely sort of where it's been for the last decade. And the missing piece is accident scene data. And that means that for any claims organization, the only way you're generally finding out about these is someone's calling in. And F&OL online penetration for most carriers continues to be really low. The customer's calling in and saying, I was driving my kid to school, I was on this road, this is the weather, the airbag went off, this is how it happened. And what's interesting is you'll see as we go through some of this, all that data is available on the phone. When you have a UBI program and you're capturing all the data from the driving, you see every one of the trips, and you have a lot of the information that fills in this first notice of loss and informs the investigation phases, which is going to be both great for consumers to make this process more streamlined, and it's also a significant efficiency gain to the carriers. On page 29, you can see just a really high-level example of some of the types of things you can figure out, and we're not covering kind of all the detail of the claims functionality here, and we're happy to take folks through it. But at a high level, the opportunity you have is, you can do crash identification in completely new ways when you're using a mobile phone. So with hardware-based solutions, people are generally looking at one signal, like an accelerometer, and looking at sort of whether it trips a certain G-force threshold and considering that as a crash. And when you use machine learning, we're using 30, 50, 70 different factors, ranging from the airbag has been deployed to you were on a normal trip that you do all the time and it looks like you pulled over on the side of the road. As Brad was describing, we could tell you pulled over to the side of the road, you got out of the car, you were walking, you opened your phone. There are a lot of different signals that help to sort of inform both the crash ID as well as sort of a lot of the injury sciences and capabilities that are downstream. So this type of information, I think a lot of people would initially look at and say, this is kind of really basic information and it's not that interesting. But for all of you who've spent time in claims organizations, this is where most of the FTE and the people costs are. It's not on complex coverage evaluations. It's on the bread and butter every day, taking the fender benders and the simple accident scene information. And we think we've got a lot of the data here to really enable consumers to play a much more active role in starting off the claims process and putting this information together to get the process moving faster. So with that, we'll sort of wrap it up on sort of the company overview and the opportunity. Hopefully you've gotten a little bit of a sense of, number one, the potential capabilities of the phone as Brad described them. It's far more than, I've been with the company for a year, and probably when I started, I didn't have any appreciation for the potential data that you can get from the phone using these sensors, and it's only getting better, and the processing power is only getting faster. So phones are a big piece of the story. And two is that UBI is just absolutely working. There's no doubt it's highly predictive, and that mobile beats hardware, and that's kind of all moving forward. And third is just the opportunity to really enable the broader range of products and services that are personalized to consumers. If we're going to make our current U.S. incumbent industry sort of really competitive, go head-to-head with these new entrants, the industry is going to need to have to sort of figure out how to build a more engaging value proposition with consumers. And today that starts with mobile, and it starts by bringing driving data in to start to build the personalized services that consumers are really looking for. So with that, we'll wrap it up. We'll pass it back to Andy for any Q&A.
Well, thank you to Brad and Ted for those insights. Yes, and we'll move swiftly on to Q&A. And thank you to those people who are sending questions in. Please feel free to continue to do so. If we cannot address them in the time left that we have left today, then I'm sure Ted and Brad will be happy to follow up and get back to you with some answers. But I'd like to take a question from Paul Choi, American Family Insurance. And he asks, how stable is the distraction score of people over time specifically? Is it stable enough to be used in pricing, segmentation, or risk classification?
Yeah, it's actually one of the most stable signals. So we have access to a tremendous amount of data, and surprisingly, people's phone interaction behaviors are quite consistent, which may be surprising. So if you look at people's braking scores or just their car dynamic scores, they're dependent on the context, right? So if it's bad traffic, it'll change. If you're driving in the city versus the rural areas, it changes. And so you could see a large standard deviation in these types of signals, but people have actually pretty consistent phone interaction signals. And so on its own, it's a really stable signal, but what we actually try to do is make it an unstable signal. And what do I mean by that? Well, we want people to text less, so we want to break that stable signal. And so we have other programs that can actually reduce the amount of distraction people do, which decreases that stable signal. Is that? Oh yeah, I guess.
Yeah. Thanks for that. And there is a follow-up question or another question, I should say, from Paul Choi from American Family, and that is I think the age-old question of this technology, and what's the impact of smartphone-based telematics on battery life?
Yeah. So if you those of you who have looked into detail into the smartphone, so if you look at which pieces of the smartphone drain the most battery. So the GPS sensor is around 600 to 700 times more of a battery drain than the other sensors. And the screen on is a huge battery drain. It turns out that the collecting sensor data is such a marginal piece of battery that whether we're collecting sensors or not, it doesn't have that big of a drain on battery. And so distraction, you can, for all practical purposes, you can't even tell it's draining your battery.
But I think in general, if you look on the smartphone at your daily usage, which is not a actual usage, it's a percentage of the day, typically it's probably between 3 and 5% on a typical customer. So it's not a significant drain. I think that years ago, there were a lot of concerns with sort of battery drain being a big driver of adoption rates, and we haven't seen that.
Okay, and to take a question from Sean from Vision Track, and the question is quite simply, is distraction purely using a phone?
Yes. We don't use any other hardware.
But there also, if your question is more broadly about the impact of technology in cars nowadays, I think we don't have the ability to sort of measure, the monitors and screens in cars are a lot more complicated. I think there are a lot of discussions going on across the industry about the level of distraction that is created inherently by the OEMs. and we aren't able to measure that. We are purely measuring the impact of sort of interactions with the phone while driving.
Okay, and another question from Sean from VisionTrack, and he asks, do algorithms work for right-hand drive vehicles, such as you'd find in the UK?
Yeah, so you were paying attention, Sean. No, it's a really good question, and yes, they do. You just have to flip certain signals. So the example I gave about getting out on the left versus right, I specifically said left versus right instead of driver versus passenger because we actually have to flip those in those countries, right-hand driving countries.
Okay, and we have a question from Kate Green from NLRS. Doesn't the movement info assume that the phone is constantly on the person, especially driver-specific data?
Yeah, so you use the phone to collect data. So if the phone isn't present, then you don't get data. But maybe I could try to get to what I think maybe the essence of your question. So how does this practically affect results? Well, the good thing is most people are completely addicted to their smartphone. That's a good thing for data collection, but a bad thing while someone's driving. So the phone for most people is the hub of their life, right? They check all their emails, they keep in touch with people, they're looking at Facebook, and so practically almost everyone has their smartphone with them at all times, right? There's another point I was going to make.
I think the numbers are that we estimate are between 5 and 10% of trips would be missed. Maybe closer to 5% because people don't have them for some reason. So the ordinal ranking of risk is perfectly fine if the drop from when people don't have it.
Yeah, and then the other point I wanted to make that may be at the essence of your question is fraud. So you can imagine, let's say we see consistent driving data, then all of a sudden at 2 a.m. we see you arrive at a place and then we don't see a return trip. So we have a lot of interesting algorithms that kind of check for consistency. And if the phone's shut off during a certain time that usually is dangerous, like usually late at night on the weekends, then we can detect that fraud. And so even in those cases, it's actually a pretty clear fraud signal.
Okay, thank you for that. And we have a question from Pavan Matthew from LexisNexis, and he asks, how do you get airbag deployment with the mobile phone? Apologies if we've already covered that.
No, great question. So the main way you do that is, let's just go through what an airbag is. So the airbag explodes, and this changes the pressure significantly in the car. So you have this pressure wave, and so you have a big spike in the barometric pressure, which we measure in the barometer sensor. And then the next question is like, okay, well, what if the windows are open? Well, you see the exact same thing. It just kind of shifted by a constant factor. So the main sensor we use is the barometer to detect that, but we also can detect it via accelerometer as well. It's a smaller signal, but also useful.
Okay, thank you. And a question from Nikhil Tenger with American Family Mutual, and he asks how accurate is mileage information compared to OBD2?
So the mileage is super accurate. I don't have the plots in front of me, but I think it's over 99% correlated. When you look at the plot, they're just all on the line. So yeah, mileage is extremely correlated. And maybe to add a little nuance to that too is if you just pull the GPS, it's actually not very correlated because the GPS sensor is noisy and it'll pop around the road and it'll always overestimate. But we have road snapping algorithms and other algorithms to post-process all that data, and because of that, it makes it over 99% R² correlated.
We do have another question. So how much does distracted driving really impact a driver's risk profile?
Yeah, this is a good question, and I guess there's a couple pieces. One is for 3/4 of the book, it probably doesn't change the risk profile a whole lot. For the segment, the 20 or 30% of people who are actually like very highly distracted, meaning upwards of 80% of their time while on the road is actively using the phone, that has a very significant sort of impact on their risk profile. When you take sort of the weighted average on the overall book, we've done a number of studies at this point that are all pretty much coming in at, for every 1 point of additional distraction in the book, there's between 1 and 2 points of additional loss ratio. So most of it's being driven by that one segment of very active, distracted folks, but the overall impact on the book is 1 to 2 points for each point of distraction. Do you have other questions, Andy? We can't hear.
Yes, sorry. Actually, I had my mute button on, so apologies. I was just reading the question off to myself. So yes, a question in from Paul Isaac with American Family. And what happens if A, I forget my phone, B, my wife or kids are using my phone while I'm driving, and C, if I have a second phone, e.g. a work or personal phone?
Yeah, so let me address each of those individually. So there was a previous question asking about if you forget your phone. So if the phone's not there, then you just can't collect data, right? So that's a requirement. But practically, we don't see that happening, right? Maybe every once in a while, but if you're talking about risk scores and insurance, it's statistical and probabilistic, so it doesn't change the score at all. It could only change the score if it's a systematic, like if you purposely leave your phone during these times, but then this will trigger our fraud flags, right? And then you just wouldn't offer them a discount in that case, right? And then your second question around what if I hand my phone to my kid or my spouse in the car? So this is actually a really fun, challenging problem. So there's a number of ways in which we're solving it, and pieces of it are still in R&D. So the driver ident algorithms, I mentioned before that there's no kind of silver bullet way to solve this, but the good thing about machine learning is it performs well with really noisy signals, with a lot of really noisy signals. And so for the most part, it's very robust to you handing your phone. So let me just go over some concrete examples to make this real. So let's say we get in a car, we're driving, and then I hand the phone to my wife, and maybe she's texting someone for me so that I'm not distracted. But then what usually happens is she'll hand me my phone back, and when I get out, you'll still see the exit signal get out of the driver's side, right? Then you can say, okay, well, what if she gets out? And so there's a bunch of these scenarios you make up, but for over 90% of the cases, and maybe higher, it's robust to these kind of changes because of the nature of machine learning and the way we solve the driver-passenger problem. So that's one. And then two is if you look at human movements, and sorry if I get a little technical here, over 99% of the energy in the signal happens below around 15 hertz. So what this means is if you sample at double that frequency, the so-called Nyquist frequency of around 30 hertz, you can actually get all of everyone's unique movements. And so the cool thing is that the way I hold my phone, the way like I vibrate or the way I put the phone to my ear is actually very different than my wife, and everyone kind of has a unique fingerprint about how they move and how they handle the phone. And so outside of the robustness of DI in its current form, we've seen this phenomenon that we can actually look at the vibrational profile of the phone if we sample at the right frequency and tell on a second-by-second basis who's uniquely holding the phone. And there's still more R&D we need to do on that, but it looks quite promising. And then the third question is, what if I have my work phone and my home phone? We actually have a fleet product, and this is the exact question we're trying to answer. And so, again, there's a number of ways to do this, and it totally depends on the scenario. But we can actually look at patterns. So, okay. They're telling me to talk faster. So there's ways to solve that as well. I'll leave it at that.
Okay, no problem. And we have another question from Jack Welmerling with Nationwide Insurance. And he asked, can the algorithms differentiate between a motorcycle versus a car versus a bicycle?
Yeah, totally. Based on the other stuff I said before about looking at the magnetic field, motorcycles are not contained in a metal box. They have different vibrations, etc. So it's actually quite an easy problem.
I think one interesting observation broadly on sort of the accuracy of mobile and a lot of things Brad's described is it's really good, but it's not perfect. And when you compare it to sort of, in some ways, we see a lot of people trying to dig into like these real one-off situations that aren't perfect. But if you step back and think about this, today we're generally pricing the vast majority of our book off of sort of whether people paid their electric bills on time and whether they had losses 2 or 3 years ago. I would say that even if UBI data was like only partially right, it is still multiple times better than sort of the older traditional methods. And I think that we are continuing to sort of Pareto work the use cases, like what happens if we pass the phone from the front seat to the back and then the kids are on YouTube, and how do we get that score right? Those are all solvable problems, but I think that when you look at the data, it's sort of overwhelmingly compelling at the pricing level. And really a lot of the work that we're putting into sort of the product now and the data science is to get it so that at the consumer level from or the loyalty programs, that the consumer perception is that it's accurate, because it's already statistically head and shoulders above anything else you can come up with sort of with traditional rating factors.
Okay, so moving on, we have a question from Judy Abrams from PACC. And she asks, can readings be obtained if Wi-Fi or Bluetooth are turned off?
Yeah, it's robust to both of those. And again, because our platform is fundamentally based on machine learning instead of just software. So software is deterministic, and so if all our algorithms depended on all these deterministic signals, then my answer to that would be different. But because of this nature of machine learning is robust to noise, and we use a lot of different signals, the answer is yes.
So basically we're capturing the data even if the Wi-Fi is off, and then when the phone goes back onto a network, it would upload it. So it may be delayed, but it doesn't miss all of that data.
Right, and only the heavy data is uploaded over Wi-Fi. The other data is uploaded over cell network anyways.
Okay, fantastic. We have a question from Jeff Herman from Kanematsu, USA. Do you need to get apps installed on the phone to send the sensor data? If so, then how to make that happen?
The answer is yes. Our technology is fundamentally, again, like embedded into an insurance company's app. And so you do need to have the apps on the phone. And I think this is also why when you look at sort of this question of mobile telematics, there is kind of a broader mobile strategy position that's sort of needed. So it's not just new business for a 3-month or 6-month monitoring period, but it's how do you build apps that are compelling to consumers and at the same time increase app penetration on your book, which then helps with self-service adoption rates, engagement, and different things like that. But yes, you do need the apps on the phone.
So to take another question from Adam Maturek from Motorpress Polska. How do you find out if someone is driving or seated behind the driver?
Yeah, so we look at around 150 different signals overall to tell if you're the driver or passenger. One example, if you're in the back seat, and I'll try to simplify this, is if you look at, so cars have four wheels, right? And motorcycles have two wheels, but the same thing holds, is if you look at how the car hits bumps on the road, for example, a speed bump, the front wheel will hit the bump and then the back wheel. And if you look at the autocorrelation of that signal, the people in back are closer to the rear wheel, and the people in front are actually equidistant between the axles. And so using this signal, you can tell if you're in the front or back, among other things.
Okay, and we have a question from Donald Light from Celent, and he asks, who do you use for behavioral science?
So I would say behavioral science is an area where we started out doing the vast majority of it in-house with the teams here, and we probably in the last year have sort of gotten much greater appreciation for the depth of science that's already developed in this space. And so we're actually working with a couple academic institutions, both to sort of leverage their insights on behavior change across different social programs. So universities that have done a lot of work in the healthcare space where we're trying to change behaviors, and we're working with them on large-scale pilots to actually do behavior modification to solve distracted driving. I think as a company, we just see the fact that there are 3,000 plus lives a year lost to being on Facebook and Instagram and Snapchat while you're driving is just wrong, and we know this problem was actually created by the phone, and we think by using a lot of the same technologies on the phone plus some of the leading thinking from behavioral science, there's an opportunity to really make a difference here.
Yeah, and so specifically we're working with Harvard, the guy who invented the designated driver, UPenn, Chicago, and a lot of these people have been super fundamental to lowering drunk driving, smoking, seatbelts, and so we're analyzing a lot of these successful historical social changes and applying it to distracted driving. And then we get this super additional boost of we have all the data and we can create quicker feedback loops. So yeah.
And there's a follow-up question from Donald Light at Celent, and he does ask, what is the lift of distracted driving scores versus regular telematics data versus credit and accident history?
So there are a couple. I mean, one is I mentioned earlier, for every 1 point of distraction, we're seeing 1 to 2 points of loss ratio. I'm trying to remember what our weighting is. When we put distraction into the overall model, I think it comes out around just under 30%. We're looking here. 39% of the weighting was distraction. So it's actually a very unique variable, and actually is not super correlated with other ones, which is pretty important. And mileage is 28%. So it's significant.
We're almost at the top of the hour, gents, but we'll take another question as we've just got time. And this is from Nikki Quast from American Family Insurance. How are you calculating the 92% accuracy at predicting the driver of a vehicle? What % of users are adjusting their driver status, and how many users are utilizing the tool consistently?
Yeah, so this is a simple question, but it's not easy to actually do this because there's a lot of confounding factors. So The best way we've seen at doing this is we pay a large group of people to correct their trips. So after they take a trip, they say, I'm the driver or passenger, and we run our algorithms over that group, and then we just take the ones we got right and the ones we got wrong, and that's how we get the 92%. So that's the safest and most robust way and most accurate way. But we can also assess it in production. So if people are correcting their trips in production, which we have a huge amount of data, you get similar answers, but it's always going to look a little bit worse because people don't typically correct things we got right. They only correct that you got the trips you got wrong. So the most accurate way is to just pay a huge group of people to correct, but you still get interesting answers in production as well.
Okay, fantastic. We've just gone over a little bit of time, so I'd just like to say to Brad and Ted, thank you very, very much for giving these insights from TrueMotion today. To the listeners, thank you very much for tuning in. And you can hear from and meet Ted Gramer and Brad Cordova at TU Automotive's 8th Annual Connected Car Insurance USA Conference and Exhibition as TrueMotion feature as a platinum sponsor. The event will be in September, the 5th and 6th at Chicago, Illinois. But with that, gents, thank you very much for your time, thanks again to the listeners.
Great. Thanks, Andy, and thanks